I'm Tony Lacantro and I'm at the Good Oil Conference in Perth. I'm joined now by Mr. Alex Parks, Managing Director of Sun Resources.
Thank you, Tony.
I believe Sun's one of those stocks, I think everyone's owned it at some point. You've been listed since the dark ages, and I think I've even lost money on Sun Resources. Now, investors have bought all the bad news. Now let's run through the good news.
Okay, well, yeah, we had a bit of a tough time as a company. We were in the Eagleford assets at the point where the oil price downturn came, and those assets were not really worth holding on to. So over the course of the last couple of years, we've dropped all of that acreage and cleaned up the company, we raised a bit of money, and we got a new project. We shifted back to conventional oil, and we're offshore in the shallow, sort of neglected part of the Gulf of Mexico, just southeast of New Orleans. We've got an appraisal development project there that we think is very profitable. When we were looking for new projects, we looked, and one of the specific criteria was it was going to be commercially viable at $40 a barrel.
I've noted the success of Otto and Byron in that region, and they look as though they're going to be successful around that oil price, so a good strategic move by Sun. So you are trading at 0.3%, so when you're priced like a dog, you've got to bark like one. Yeah. So what is going to drive Sun back over a cent and beyond?
I mean, there's a few key things coming up. We've been relatively quiet about our new project. We got the first part of the lease in August of 2017, raised the money to take it forward for the first step. We got the lease by the directors loaning in the money to acquire the land. So we then raised the money in November and to take the project forward. We bought the 3D seismic that existed over the field, and we had a nice and slightly difficult surprise. It turned out that our project extended quite a lot outside of the initial lease that we picked up, which was based on well data. So we had to quietly nominate some more land and acquire a further lease to just make sure that we had the whole drillable area of our field covered. So we got that second lease in March, and since then it's been moving forward. So we got a resource report done, and that's sort of looking encouraging. Risk has given us potentially 17 million barrels of oil in place in the P50 case, and if everything goes according to plan, we should be getting about 25% of that. So we're now moving towards the operational phase. At the moment, we're building a 3D geological model of the field to select the best place to drill the first well. That should be ready within the next couple of weeks, then permitting the well location and moving to drilling that first well in about the first quarter of 2019.
And for those investors, what are the chances of success of that well?
The best bit about this field is that it's already flowed oil. We know that the field has produced, it produced back in the 1960s, albeit from vertical wells, which was the only technology that was available at the time. So these relatively thin sands, they'd perforate maybe 10, maybe 15 feet of oil. They'd start production at about 200 barrels a day and then gradually taper off to about 40 barrels a day. What our plan is to put a horizontal well in, initially one, but probably ultimately 3, 4 or 5 horizontal wells. Putting a horizontal well into this established conventional oil reservoir should yield us about 2,000 barrels a day initial production rate, and we should get somewhere between 670 and maybe more than 1 million barrels per well in the good side case.
Quite an exciting growth story there, Alex. Thank you.
Thank you.